With all that has happened and is happening in the world of banking, many people have questioned the safety and security of their banks. Here to weigh in and provide some insight is wealth expert from CNN and Fox News, Robert Shemin. Robert, good morning.
Good to see you. How are you today?
Oh, I'm doing wonderful. You've got a beautiful background there.
Hello from Medellin, Colombia.
That's right. Listen, Robert, can you shed some light on what has happened with Silicon Valley Bank and Signature Bank to those who maybe have not heard?
Sure. And there's a lot going on with the banks, and people have fear where to put the money. Is my money safe? What to do? So, what happened very quickly? Everyone forgets that behind a bank and all the smart people that operate it are people. And what is the biggest risk? Fear. And that's exactly what happened. The bank had taken the deposits. They pay an interest rate if you put money in the bank. And what do they do with the money? They invested in loans. They put the money into notes, certificates of deposits, treasury notes, and they were worth a lot of money. But when interest rates went up, those value of those bonds went down, and people got scared, fear. These big venture capital funds who put their money in there, these are some very successful entrepreneurs, and they said, "What if this bank can't pay our deposit backs?" And many of them had more than $250,000 in their account, which only the FDIC insures up to 250,000, 500,000 if it's a joint account. That millions, and panic spread. And they went around on the WhatsApps and said, "Hey, get your money out." And it was a panic, fear. And they were pulling so much money out, the bank could not handle it, could not sell the securities fast enough, couldn't get a good enough price for them, and they were going to default. But the government stepped in and did something unprecedented. They said, "We're going to cover all the deposits, even if they're more than the $250,000 or $500,000. So people were getting their money, and the fear went down.
Right, right. And with that, do you see something like this happening at other banks?
Oh, it absolutely could, because about 50% of the banks, according to the Wall Street Journal today, have the same problem. They have money that they bought securities that were worth X. Now that interest rates have gone up, those securities are worth less, and they don't have as much money as they should. But remember, since 1933, since the government's insured those deposits up to $250,000 or $500,000, no one has ever lost money. The government has covered it. So it could happen again. And here's something else we don't think about. 50% of the money in the US and the world is held in non-banks, certain types of money markets, bonds and such, which could also have a problem of fear. The good news is, hopefully the government set a precedent, will step in, because the government can, has big power, big money, can print money and make it good. So there's fear out there, but in my opinion, if you're in a big FDIC insured account, or credit union, which is also insured, make sure you don't have more than 250,000 or 500,000 in a joint account. You probably are very well protected.
Right, right. Now, Robert, how does what happened differ from the financial crisis in 2008?
Big difference. The financial crisis in 2008, and I've been through four crises, was mainly a real estate crisis. The banks had made many, many bad loans. It all hit at once. Las Vegas, I know where you probably are. I was there too. The market went down 30, 40, 50% in certain areas, not every city, and the banks couldn't handle it. People lost their homes. Banks didn't have money. And we were really, as I understand it, a few hours or a day or two away of possibly going to the ATM or the bank and there being no money. But again, the government stepped in, put liquidity, money in the system, relieved the fear, and we're still going and blowing, so to speak. So it's a big difference.
Yeah, yeah, wow. Thank you so much for clarifying that and being so informative. I think a lot of people need this information. Where can we learn more about this and maybe about other investments?
Well, I think it's very important, if you have money in the bank, to make sure you're insured, or make sure not over that amount. Number two, there's other things you can do. Money markets, treasury bonds, T-bills are some of the safest investments out there. And I think you need to sit down with your banker, with a money manager, and educate yourself and say, "Here's the money I have. What is it doing for me? Is it safe?" And make sure you get everything in writing.
That's a big one, I think, in any industry, right? Everything in writing. Well, Robert,
Yes.
thank you so much. If you have additional concerns or unanswered questions about your banking security, be sure to visit robertshemin.com, or you can connect with him on Facebook, Instagram, and Twitter.